A question came up about how to catch patterns, setups, and find great ideas. So I thought that we would do a live stream dedicated to this. Now, this is something that I've spoken about in my book. It's something that we talk about inside the Mara Elite program, but I want to share it with you guys here so that way you can have a sneak peek into the general philosophy of how you could go about finding great setups for yourselves and build upon that. That's a big purpose of this show here. So as you guys are coming in, I want to say welcome to Morning Coffee with Mike. Let me know what you think about that show too. I'm thinking about changing the name of the show. Um, Although I do enjoy a good cup of coffee in the morning. So, how to catch patterns, setups, and find great ideas. Here's the first thing that you're going to want to do. You're going to want to start with a filter. You're going to want to start with a filter. Why do you want to start with a filter? The reason why you want to start with a filter is because you don't want to look at patterns that are on anything. You want to look at patterns that already have a predetermined amount of criteria so that way you can go and have a better opportunity to trade patterns that work. I look at stocks. So when I'm looking at stocks, I don't want to look at stocks that just happen to have a pattern. I want to look at stocks that already pass a whole big laundry list of fundamental criteria and then hunt for the patterns in those. So that way I'm going through a much smaller list and I'm looking at a list where the patterns, if they do work, have a much better probability of working. So, and by the way, all this actually starts from the book on page 69 of my book, The Trading Mind Wheel. We'll still go through everything here, though. All right, so you come up with a way to filter the market down. I'm looking at a number of different things on how to filter the market down, but let's just say skip that part and go to the actual setups that we're looking at. We're not talking about filters, although filters are a part of it. We're looking at how to come up with a setup. Now, I have a spreadsheet here that I'm going to show everybody. I already have it up over on YouTube and on LinkedIn. I'll switch the screen over here on Instagram and I'm zooming in a bit on my spreadsheet here. And you can see that there are a number of things on this particular sheet. We've got the name of the setup that I'm going to be interested in, the time frames, the length of bars needed for that setup, the length of bars needed around the pivot area. Hey, well, you might have a question. What's the pivot area? If you do, type it into the chat. Let me know. Otherwise, I'll assume that you already know it. We've got the depth of the pattern, the length of the pattern. Okay, we've got some people asking about the pivot. What is the pivot? So I'll jump over to this part of the screen, right over here, where I have some models of each of the setups that I'm interested in. So I'll click on this one. And this is pulling up. There goes my notepad. This is sharing an example of what I'm interpreting as a pullback buy. This is a stock that I actually traded that I noticed was running for a long period of time. This is a screenshot, so it only goes back a couple of months, but it had this run and then it started to pull back, right? You see it pulling back over here, then it pulls back some more and it's consolidating right around that red line right there. That's the 50 period moving average. So I'm seeing it pull back. And as it's pulling back and it's tightening up right in this little area, that's the pivot. You see how it's contracting here and contracting there, and then it pulls back one final time right around that key moving average before it breaks out. This is the pivot. So I'm looking at the depth of the pattern, not just of the overall pattern, right? Not just of this whole thing, but I want to know how much prices contracted right around there too. So I'm getting very, very detailed in there. And I'll answer questions as we go in this session. And I see Someone asked a question over here on YouTube. Let me read this. Will you trade commodity stocks even if market conditions are bad, provided they give you a good setup? That question is sort of related, so I'll answer it. But for right now, I want to try to keep all the questions on setups in general. So, will I trade a setup even if it's a bad market condition? Yes, I will. If the setup passes all the other criteria, right? So when we're thinking of setups, think about it like you are baking a cake, right? You have all your different ingredients for how you're going to bake this cake. You need flour. You need maybe you're baking a chocolate cake, right? So maybe you have some chocolate. You have your eggs. What else goes into a cake? Maybe you have water. Maybe you have some kind of oil. You put all those things later on. You put it into the oven. After that, you come out. You put the icing on the cake. So icing is an ingredient. Maybe you're making your icing from scratch. I don't know, but you have all your different ingredients. There's certain ingredients that you're mixing in the bowl, right? You're mixing the chocolate, you're mixing the eggs, you're mixing the flour. The icing comes later. You wouldn't put the icing in the bowl and then bake it in the cake, right? Nobody's do that. That just sounds ridiculous. When you are thinking about the setup that you're going to trade, and this goes back to Akshat's question over on YouTube, I will trade a setup even if it's a poor market environment, provided that it's met all the other conditions that I'm looking for, right? So it's already passed all my screens. If a stock has passed all of my screens and I go through my universe list, my universe list is simply the list of the stocks that have passed my screens. I go through that list. I find a setup that I'm interested in. Market condition sucks, but this has a fantastic setup. I put it through my gauntlet. We'll talk about the gauntlet in a little bit, but it's basically a checklist. Goes through all that stuff. I find out that this thing is the best setup that I've ever seen, but the market condition sucks. Well, guess what? I'm still going to take that trade. I might trade a little bit smaller than I would have, right? This is where position sizing starts to come into play, but I will take that setup. Great question. Let's continue with the rest of this stuff over here, right? So bring this Instagram back over here, right? Got a lot of folks on Instagram, so I move my phone around the desk as we're doing these presentations here. All right, so we spoke about this area here. We spoke about the length of the bar, the depth of the pattern, the depth near the pivot. You know what that is. Then I'm looking at the character of the setup itself. Each setup is going to have its own type of character for a pullback, right? Take a look at some of the stuff that I wrote here, that it typically pulls back into the 21 period or the 50 period SMAs. Sometimes in an exceptionally strong stock, you will see a stock pull into the 5 EMA and then continue running. Sometimes it'll pull into the 10 EMA and continue running. For me, right, for Mike Lamott, we're talking about, right? Because I'm talking about my system, and you could go and take this kind of model and model it for yourself. That's the magic of this. It's the framework. I'm giving you the skeleton. You fill in your own blood and guts and all that fun stuff. So for me, I wanted to pull into the 21 period or the 50 period because that's where I'm seeing stocks tend to get more of a bounce. For you, it might be different. Maybe you observe something else. That's perfectly all right. But you want to have the look and character of what's happening in the stocks that you are, in the setups that you are looking at. I want to see the slope be no more than 45 degrees on a pullback. I want the price action to be smooth and controlled, right? All the things that we saw in here on the sample, right? The sample is pulling in at less than a 45-degree angle. It was a little bit jagged over here. Then it came back, and then it got super tight, super controlled right around here, right around that 50 period moving average. One of the things that I like about this particular setup is that the 50 period moving average tends to be a spot where buyers will step in. right? It's one of those things that has just worked for ages and ages. Part of it is because that's what the major institutions of the world use. But when we think about, well, why do they use a 50 period moving average? Why not a 10? Why not a 5? They may incorporate those as well. But the reason why the 50 is so important is because if they're moving around billions of dollars. They can't enter and exit like you and I can. So when price goes into a key moving average like that, more of them tend to protect positions and to begin to get involved around those kind of areas. So for us, if we're observing this kind of a pattern, we could see that if price breaks out of here, well, we already have the philosophy that the major institutions typically step in around this area. But what we also have is a very clear place to exit if we're wrong. So in this example, price broke out. We had a stop loss right below that 50 period moving average. Price continues to run. But let's say that didn't happen. Let's say price breaks out and then it collapses. Well, then we have a very clear spot on where to exit, don't we? Right? Price tightened up, it got support right around that 50 period moving average, and then it continued. So, very clear line on the sand if price is doing what we expect or if price is not doing what we expect. All right, we've got a follow up question from Akshath. All right, it says, thanks for answering my question. You're welcome. One more follow up. I found stocks that pull back to the 10 EMA are more failure prone than the 21. Do you find that too? Yes, I do. Uh, not always, but more frequently. Something else that matters as well is the behavior of the stock. So, what does that mean? If you have a high flyer, if you have a stock that's had loads of momentum, it might get support around the 10 EMA, it might get support around the 21 EMA. This is where understanding how the stock moves can come into play as well. It just so happens that after looking at thousands of these things, the 21 EMA tends to work more from what I've observed, as does the 50. That's what, if you muted myself on Instagram for a second. Uh, if you notice this pattern here, right? Even just on this chart, you see how it's pulling back to that purple line. That purple line is the 21 period moving average. So this one was getting support around there, right? Maybe somebody was buying in that area. Then over here, you can't expect any of these moving averages to hold forever, right? So at this point, price gets extended and then it starts to pull back and then tighten up and then pull back some more. And this was actually the first time that it's seen the 50 period moving average in quite a while. So it shakes out below the 50, comes back up, resets, and then it was, in this example anyway, was ready to go. Got another question here from uh, Skinny Panda in New Jersey. It says, just completed your book and love it. Oh, thank you so much. If you write a review on the place that you purchased it, that would be greatly appreciated. So Amazon, Barnes and Noble, wherever you bought it, I actually think that you could leave reviews in both spots. But certainly leave a review. That would be super helpful. Also, make sure that you go to tradingmindwheel.com. If you upload your receipt, you get a bunch of bonuses on there. Anyhow, Spoke 7 testing, you give plenty of examples for back testing, but I don't remember you going into too much detail about forward testing. Part of forward testing is doing this stuff. Forward testing is testing in real time. So let's say, just for example, that you want to test out one of the setups that I have here. These setups, by the way, are all setups that I've outlined it in the book as well. So let's just say that you wanted to test these for yourself. All that would entail would be going into the market, finding those setups, and then tracking how they perform. You could do that either with paper trading or you could do it with real money. If you do it with real money, my suggestion is that you use a small, small, small token amount to test with. The reason why is because when real money is on the line, that's when with all of our beliefs about money could start to come into play. Another way to think about putting testing with money is that's going to be our tuition fee to see if something's actually going to work. So if we want to keep our tuition fees small, then risk a small amount. But yeah, if you wanted to go and test any one of these patterns, just pop open your charting platform and see if you could find them with this kind of criteria. You do, then track those trades. And that's basically it. And the more important thing about all this is to, yeah, you could certainly start with what I have here for how I'm looking at the setup. So that's a great way to start. But let's say that you're somebody that's listening and you're a bit more advanced. You could take any setup that you've been looking at for years, put it through this kind of paradigm, right? Write out, well, what's the look and character of the setup that you're looking at? Where in the trend does this thing normally show up? Maybe you're somebody that's trading options, right? Maybe you're an option seller and you want price to be trading sideways. Well, then this is different, right? I'm looking for stocks that are in uptrends. Um, Having a boosters section is extremely helpful. What's a booster? A booster is something that takes the setup that you're looking at and takes it from good to great. We want to be trading the best of the best of the best. That's what's going to give the most uh, wind in our sails. It'll give us the highest probability of success. That's why whenever I find the baseline criteria of these setups, all the things that it must have, I'm not just taking setups that have the bare minimum. I want the stocks that have boosters that makes them great. Line up the odds of success in your favor. And then after that, we want to find models. We want to find as many models as we can of the ones that worked, right? And have it in your own platform. It's one thing to read it in a book. It's one thing to sign up for somebody's service and see the way that they've got it here, right? I'll pull up another one here, right? It's one thing to see it like this, already drawn out by somebody else. It's another thing to go and make the annotations yourself in your own charting platform. That's what's going to really instill all these things in you. You've got to do the doing part. You can't skimp on that. You've got to get the experience for yourself. So put it into your own platform, the own way that you have your charts set up. And then over time, after you're doing this several hundred times, then you're going to be able to spot patterns. You're going to be able to look at a chart and instantly know if something is a good pattern, if something is on the verge of being a great pattern, if something completely sucks and you move on to the next one. That's how you're going to train your eye and you'll be able to do this stuff very, very quickly. All this stuff that I'm talking to you about here, right? Everything that I've mentioned, it's all stuff that I started when I was trading part time, right? Now, right now, I've been at this. I've left the corporate world about 5, coming on 6 years ago, and the process is still the same, right? Maybe I'm not talking on Instagram in the middle of the day back then, but the process is still the same. When was I doing this work? I was doing this kind of work at night on my commute home, right? Riding the Long Island Railroad back home, or before I bought my house, riding the subway back to my apartment. That's when I would do this kind of work. Have the chart book open, have an iPad open, looking at things, studying. That's how you get this kind of stuff done. Then get home, do some more work at night, drill this stuff, put it into your mind, and then eventually you start to look at a chart and you'll know instantly if something is meeting your criteria or if it's not. You need to study the models. If you're only reading it, and then going out and saying, okay, I read Mike's book, or I read O'Neill's book, or somebody else's book, and I'm going to go and put my money, all my money in and try to do this stuff, then that's a very expensive way to learn. And the reason why is because you haven't trained your eyes yet. You haven't trained everything else that goes into trading. That's why I wrote this book, because I had to read a few dozen others to get all the different skill sets that I talk about in here. I want to at least give you the different skill sets that you need in order to be successful. So, let's see what other questions came in. I answered a bunch from YouTube. I'm just going to scroll through, and I see more questions coming into YouTube. YouTube has been very active lately. You guys over on Instagram, get your questions in. And if you're not already following over on YouTube, that might be a better spot to watch. Part of the reason why is because seeing it vertical on the phone might be a little odd, but also it's easier to read the questions as they appear on YouTube. Yeah, question from Nils09. Will you upload this on YouTube? Yes, I actually have a YouTube channel. If you click the link in my bio, there is links to all of my social medias. One of them is YouTube. Someone's asking about NVIDIA short. Well, I'll jot the NVIDIA short down. Well, my notepad fell, excuse me. I'll jot down NVIDIA short. First, I want to answer questions related to what we were just talking about, but I will get to that one, I promise. All right. All right, great. So I'm going to go back over to YouTube and look at those questions that came in. Let's see. So, yeah, a whole bunch came in from Skinny Panda, some more, and I see some more from Akshath as well. All right. So, uh, Skinny Panda says, for me, forward testing is paper trading, a new idea I have with live data. Yeah, that exactly. That's perfectly fine. Also, since I trade ES, once I like the new strategy, I will trade it with a micro ES contract. Am I on the right path? It sounds like you are. Any suggestions or concerns? How do you forward test the? Well, if you're trading one contract, so there is a one small concern, or one concern that I would have with one contract, and the one concern is about position sizing. It's about or not it, actually it's less about position sizing and it's more about the trade management. If you're only trading one contract, then it's an all in all out trade. If your style is all in, all out, then it's a moot point. But if your style is one where you typically scale into a trade and you typically scale out of a trade, then one contract begins to become problematic because you are missing out on how you would typically manage that trade. But otherwise, it sounds fine. Akshath says, I used to trade the traditional low cheat, but have found I have a low win rate with it. I prefer consolidation breakouts as a setup. Do you find failure to be higher with the low cheat? Um, I find it to be about the same. Perhaps we have different criteria. Maybe we're looking at different types of low cheats. For example, right, and I'll share my screen again. Come over to this, switch this around. Okay, so when I am looking for any kind of stock that I'm going to trade, first thing that I'll do, right? So presuming that I already found something that's on my list, I'm coming over to links, trade gauntlet calculator, and any stock that I am going to put my money into is going through this whole gauntlet. This gauntlet is a checklist of about almost 100 different criteria in this thing. Each one of them has a weight assigned to the checkbox. I wanted to pass this whole checklist with a score of at least 7, right? So the scores out of 10. I wanted to get at least a 7 in order for me to put my money into this thing. So it is possible, actually, that we're looking at two different things. But if I find a low cheat and it passes all this stuff and I trade it, it has about the same win rate as anything else. And for me, that's about 50-50. Let's see, what other questions do we have over here on the YouTube that have come in? Question from I'm third. When trading part time, you set buy stop order one night before. Is that right? Yes, it is. Yes, it is. So the way that I operate, I will do all of my work, 100% of my work at night on weekends. That's basically it. Uh, it's exceedingly rare that I will do stuff in the middle of the day. I prefer swing trading. Swing trading allows me to operate how I am right now. If I were day trading or if I was scalping and I was in a position right now, I couldn't do this live stream as an example. At least for, well, I could probably figure out ways to do it. I don't want to say that exactly, but swing trading has been the thing that I enjoy the most. It allows for the most flexibility. It worked when I was part time, when I had my full time day job and I was commuting to Manhattan every day, coming home around 6:30 or so, 6:30 p.m., and then doing work while I'm on the train during my commute, doing work in the evening, and then coming up with the plans at that point, and then setting up all the orders. And then the next day, if they trigger, they trigger. There's nothing else for me to do. So, another question that uh, can go right in there is, well, Mike, well, what about volume? Right? That might be a question that you have. If a stock breaks out on volume, are you interested in it? Or if you set up orders ahead of time, how do you know if it'll have the volume that you're supposed to have? Uh, Many people have read O'Neill's work, and O'Neill would always look for a 40% above average volume on breakouts. How do you know if you're going to have that or not? The answer is you don't. The answer that I found is that it doesn't really matter if it has the volume or if it doesn't have the volume on that day. What I mean is this: it's more about price breaking out and behaving well after the fact than it is have about having the specific volume on that day. So you could have a stock that breaks out and breaks out well, closes near the high of its day, and does so on about average volume. I would much prefer that than a stock that breaks out and then closes near its low of the day but has the volume, right? Then that would be something that would be telling me that, oh, price attempted to break out, but it was immediately met with loads of selling pressure. That's one way to think of it. Another way to think of it is that sometimes volume comes in a couple of days later. I would much prefer to get in at the precise price that I want versus waiting for volume confirmation. That's just me. And all the benefits that come along with doing it in that way is that I could set up trades and not have to look at them. They'll just trigger when price crosses. Sometimes price crosses right at the open. Sometimes it crosses in the afternoon. Sometimes it crosses near the close. It is how it is, and it lets me be a lot more hands off. Book that you guys might be interested in is Nicholas Darvis's book, How I Made $2 Million in the Stock Market. And it's a wonderful book. He was a part time trader as well. He was a full time ballroom dancer, didn't want to be bothered at all during the trading day. And this is exactly how he went about doing it. So if it worked for him, it worked for me too. All right. Now, it looks like that's all the questions and all the time that we have for today. So, once again, thank you for joining. If you haven't read the Trading Mind Wheel book yet, go get it. It is available on Amazon and Barnes and Noble and all those other places. If you have read the book, please leave a review. That will help it get into the hands of more people, and it will help me feel good if you leave a good review. If not, well, then I'll write a better book next time. All right. So thank you once again. I'll see you back here on Friday. Take care. Much love. Peace out, everybody.